Good morning, everybody.
Good morning.
How's everybody doing?
Wonderful. How are you?
I'm doing fantastic. I'm gonna give a minute for everybody to pop on. I don't know if Frank wants to give us a quick mortgage minute while we're waiting for everybody else to come on.
Sounds great.
Frankie. Frankie from Motto Mortgage, take it away. Oh, I think he may be he's gonna keep us in
I'm
suspense
here.
for a
No, I'm
moment.
here. I'm here. I'm here. Good morning, everybody. Another crazy week in the bond market, ups and downs. Fed Chairman Powell met with Trump yesterday, and looks like they had a little bit of differences on the building of the new Federal Reserve building. So we'll see what happens. But in the long story, rates are still the same. We haven't really changed that much. They went up just a little bit over the last 2 days. We had a good run for a little bit, but rates are still hovering, and again, that same mid to upper sixes, low sevens, depending upon credit score. And the government loans are a little bit better, low to mid sixes. So we're going to see this. We're going to see this for quite some time until they decide, and so or until they can figure out which way they want to go. If they want to cut rates, if they don't want to cut rates. So the meeting is next week. I don't anticipate any rate changes, but again, you don't know what this what's going on with the tariffs and so forth. So we'll see. We're going to just keep an eye on it, and let's just get some pre-approvals in. And as far as pre-approving anybody, again, we talk about if the rates go up, they have to get pre-approved, or if they go down, same thing. Their buying power goes up or down. But for right now, we're just going on a sideways run. Nothing really has changed. So there's really not much to report this week. We'll see what happens next week's Fed meeting, and we'll keep you updated.
Okay, and Frank, outside of rates, like I know you've had a couple of transactions where our team has referred you where they were declined by traditional lenders. Can you just
Yeah.
give one or two examples? Because I am promoting you, but I'm not promoting you. I'm promoting the concept of finding ways to do transactions. And Frank, if you fit in, that's great. But share a couple of ways that there were rounds of agents that had deals that had expired. They were falling apart. And give me two examples.
So one of them was a program where a condo wasn't approved by Freddie Mac, and it turned out that we actually reached out to Freddie Mac and sent them we had to dig deep. It was a really convoluted thing with the insurance on the building. So I reached out to the insurance company that covers the building, and I got the actual policy. We had to get the entire policy, so we had to upload it to Freddie Mac. And Fannie Mae said no, but Freddie Mac said no with a question mark. They said it could take 5 weeks, but they actually got back to us in 3 days, and they overturned their initial ruling. So we were able to get this condo complex approved, and the client actually had closed, even though both agencies said no, they wouldn't do it. And this was something where it was a lower down payment than the traditional non-QM. So we were able to overturn it, and I think the borrowers put like 10% down instead of 25% down. So
And
by digging deep, we got that condo complex approved and got the loan closed.
my opinion is that because of the size of the lender relationship that you have with United Wholesale, that they got it done.
They
And
got it done pretty quickly.
real quick with the second one, because I want to be done by 5 after.
Okay, so I got 30 seconds. There was one where one of the clients had backed out because they didn't have enough down payment. So what we did was one of my lenders has a 1% down payment. So we actually gave them, it was a conventional loan. So we gave them, they didn't have enough funds. So we put them into what's called the conventional 1% down program, where they put 1% down. We gave them 2% down, and that equated to 3% down. So with that, we were able to get this loan in underwriting, got it approved with 3% down, one from them, two from me.
Fantastic. All right. So today is the macroeconomics of real estate. All right. And what really piqued my interest was because the average age of a home buyer is keeps going up and up and up and up. And I wanted to try to understand a little bit about why that was happening. And I'm going to start with sharing the screen. and going through some statistics to give you ammunition to talk to your clients. So this is the past 10 years. Household formations in millions: 1.2, 1.3, 1.2, 1.1, 1.2, 1.3, 1.5, 1.0, 1.2, 1.7, 2.0, 1.1 so far. Forecasted home buyers in millions. Seems to trend a little bit to the household formations, but there is a downward trend in U.S. household formations, which I think is going to put a little bit of a headwind into number of sales and sales prices. It'll be less supply and demand math. I also want to share with everybody the percentage of total buyers that were first-time home buyers. We're at minimum a 10-year low, if not an all-time low, at under 25%. Okay. Home sales, I remember in like 2022 and 23, we were like, oh, they have to come up. Well, so far they haven't. The average age of a first-time home buyer is at a minimum of a 10-year, if not an all-time high at 38. The average age of all home buyers is at another all-time high at age 56. Does that surprise anybody? All those numbers? Anybody? Just me?
Yes and no.
Okay.
Because when you have young kids in your household in their mid-20s, late 20s that are trying to buy a home, it's hard. So it doesn't surprise me that the age is going up.
Okay.
Right. The amount of the average household income is a lot for, I think I said approximately 114. So a lot of folks not making that if they're single family or, a single person. So it has to be almost a dual income to afford a house nowadays.
Yeah. I mean, and some might even say years ago they felt that that was somewhat the case. One tremendous opportunity. I don't have it. I haven't shared this with you yet, but there's probably slightly over 40% of all homes have no mortgage. And do you think those are the young folks or the older folks that have no mortgage?
The older folks who have been in their homes for a long time,
Right.
I think.
So I think one thing that I would like to figure out how to do, and having, a collaborative effort would be fantastic, is figure out how do some of these baby boomers and the elder generations, how do we get them so that they can transfer some of their wealth to their children while they're still alive? Because what's happening is um, they're living longer and they may not be transferring wealth until, their children are in their 40s or 50s, and they can't buy houses until then. So that's something that I think with the great transfer of wealth that wasn't accurately factored in. And wouldn't it be cool if, and I'm not saying that we want to have all the kids groveling for the parents' money while they're still alive, but maybe there's a way that we can even talk about that in a proactive way where, if parents have no mortgage, parents probably are delaying downsizing, and there's a way to transfer some wealth so that the children can enjoy the money while the parents are still alive. Probably an opportunity. And I don't know if anybody has any thoughts or ideas on, how to do that, how to talk about it. Does this come to anybody else's mind?
Rob, I have an idea. Can you?
Okay. Yes, we can.
And thank you for all the time you spent in Arizona with us or this week. And I'm surprised that you could leave town here at 8:30 last night and you're bright and shiny on our Zoom call this morning already.
Yes.
You're the Energizer Bunny. So, the transfer of wealth and legacy money, what I would call legacy money, is not as complicated as people think it is. In other words, I'd like you to speak to the gift tax allowances that parents already have. They don't have to they don't have to give their entire estate to their children to help them. And it's amazing with FHA programs, as an example, 3.5% down, and maybe our mortgage people could speak to this, but 3.5% down can get an individual into a home. Let's say, for example, the gift tax allowance is $38,000, and you're looking at a $500,000 home. Well, that's only $15,000 or $16,000 down. You've got more than enough money left over out of that gift tax allowance to buy down the interest rate to a lower rate to make it more affordable for the child. It's more, it's, you can even as a parent co-sign for the child. But I personally don't think that there's enough knowledge in the legacy money. There's not enough valid information going to the parents that would justify why, $30,000-$40,000 to help a child get into their first home can make a significant difference. It's the difference between doing and not doing it. And so I've opened the door for you to comment on tax implications and allowances that we already have, and maybe that would be a topic for another mastermind. But it would be an interesting, if you're doing contact management with your client base, it'd be an interesting article to say, did you know you can gift your child enough money right now to help them buy their first home? They don't have to wait until they're 34 years old.
Howard, is that $38,000 a year or a one-time gift?
There again, I'm honestly not sure if it's a one-time gift allowance. I mean, there's a difference. In estate planning, there's a difference between one-time gift allowances to a child, and then there's also another level that they can be gifted. And but again, I'm not a tax guy, but it'd be interesting to have a tax person and a state person come on and talk to us about how can a mom and dad or a grandfather, grandmother structure a small gift. This is a small gift. We're already talking about the wealthiest generation in the history of America and what they're going to be doing with their wealth. And a small gift can make a total difference for the child that's the benefactor. They're going to get it someday anyway.
All right. So Howard, I have an update for you here. If you believe ChatGPT.
It's Daniel. I looked it up.
So apparently it's 19,000 per parent to child. So 2 parents to 2 children
There you go.
would be 38 times 2 is 76. Now, if they give more, it's like, wait, there's more. I feel like an infomercial. If they give more, the excess is not taxed. It goes towards their lifetime exemption.
There you go.
And the lifetime exemption is 13.99 million in 2025, and it goes up to 15 million per individual and 30 million per married couple. So there's a lot of creativity, and maybe just having an awareness of this, Howard, might trigger some interest, right? Or I don't know. Sometimes children are taking care of parents, right? They're in that position, and maybe the parents can strategically plan on doing that. And there's even a conversation that is happening now in Washington, D.C., where they're thinking of doing an unlimited federal exemption on the sale of your primary residence if you've been there for 2 of the past 5 years, you can do it every 2 years. And Howard and I don't know who else we were talking to, maybe Gary Greenacre, we were talking about how that might really unleash a lot of inventory in Scottsdale in Arizona, right?
I think it'll unleash inventory all over the country because you've got this aging population that is thinking about downsizing, but they look at the tax implications and what's left over, blah, blah, blah. And if they could take all of the gain on their home is now worth $1 million. They never dreamed it would be worth that much money. If they could take all of that gain tax-free and roll it into a different property or 2 properties elsewhere and have no tax implications, I think it would free up a lot of inventory, and it would generate an awful lot of purchases. But that law hasn't come about yet.
Right, that's in discussion. somebody mentioned, what's a ladybird tax, Nicole, or ladybird transfer?
So the Lady Bird deed actually, it maybe doesn't pertain to this conversation as much, but it's basically it avoids or bypasses probate. So if you have someone that has multiple children, they are later in the season of their life know that maybe they're in a home or something like that. It allows to bypass that, and you can put it. It's like a trust. Miguel was just mentioning a trust. It's another form of a trust, but it avoids probate. It's a way to bypass that, and you can actually name the children without having to go through that probate process.
Well, thank you for sharing that.
Yeah, so let me look into it. I've been recently I've been recently made aware of it, and I thought that that was better than a trust for one of my clients.
Okay. Well, I appreciate you sharing that. I'm going to go through a few more statistics while I'm still spry, like Howard mentioned. So projected households, although they may not be growing as fast, over 10 years, 1 million a year is still going from 146 to 154, 156. You see, I have some other cool stats. Those in Florida may not feel this, but average days on market, literally just pivoted the past 2 years by only 4 days. Average sale to ask price is still extremely robust. Household incomes are continuing to rise, but perhaps not as much as 106 to 114 to 116 doesn't seem to be keeping up. Home sales prices to income, it's been pretty consistent at 3.6 to 3.87, 3.9. So that's really interesting. Housing expense as a percentage of income, is 23 to 25, is surprisingly consistent. Home prices risen 52% from 2014 to 25, while average income rose by 54%, which kind of surprised me. I would have thought housing prices in the past 10 years would have outpaced income. Anybody else in that boat?
Sure.
That surprise anybody?
Yeah.
Agreed, yeah, surprising.
So, and I don't know, somebody on here is probably saying, why the heck is Rob going through all these stats? It may be interesting, but what does it do for me? And I think what it does is it helps us educate, our clients, right? And that may unlock or unfreeze buyers and sellers. Certainly, if people aren't doing anything, by educating them, we give them an opportunity to see what's possible and other ways to craft how to do something. And it really does surprise me that the percentage of income or housing expense to income is staying there right around 25. Any lenders on, Frank? Any other lenders? Does that surprise you? Guess not. Let's go
I
back
think
to
it
the.
depends on the loan type or what a buyer is. Uh, if they're getting finances, what kind of buyer it is, because I'm seeing the DTI at least 40 when it comes to VA buyers, and definitely over 25 with FHA buyers. So I think it's people who are putting more than 5% down when they get into that 25%, definitely more than 5% down. So my conventional buyers right now are hitting at, less than 20 on the front end ratio.
Okay. Anybody in Arizona, are you seeing, or Florida, are you seeing Canadians selling property at this point due to, exchange rates and perhaps maybe political sentiment?
Yes, in the over 55 communities, they are. And so those prices are actually decreasing some of those communities because there's just a plethora of homes available.
Yeah,
Outside of those communities, maybe not so much. I am seeing them sell, but it's not really affecting the price.
So the Canadian dollar is 75 cents. And it looks like it was as low as about 70. Is anybody familiar with that? With Canadian clients, that exchange rate volatility?
I'll jump in, Rob. So the Canadian dollar actually went as high as $1.48 the day that our president announced the tariffs against Canada. And today it is, let me tell you, $1.3622. So, and I lived and worked in Canada, so that's a very big niche of mine.
Right.
And
So what you're
well,
saying though is you're saying that it takes $1.36 Canadian to buy a US,
right,
and it's
correct,
about 74 US cents to buy a Canadian dollar.
correct.
So if the Canadians have seen their homes appreciate, if they take the money back to Canada, and correct me if I'm wrong, they're going to have a little bit of a windfall because of the currency exchange.
Well, plus a lot of Canadians were buying during the whole foreclosure short sale time frame, and they literally were buying $60,000 homes in the valley and the outlying areas that you can't touch today for less than 320, 350,000. So number one, depending on the area, they've increased the value of their property, but as well as the difference in the dollar. But the big thing is that what cost them maybe $1,500, $2,000 a month to just have the cost of the home without a mortgage is costing them a lot more than that. And then on top of it, an extra $36 per $100. So especially if they're restricted on finances. And as we all know, I mean, insurance rates in Florida, or actually Wilson was saying they have a family home in Florida and their insurance is $22,000 a year. A year.
Yep. So if you have foreign property owners in your marketplace, have you sold to them? I think we have an obligation to at least explain to them that although they might be frustrated about, when they pay their bills in Arizona and Florida, right? Because they got to pay it with Canadian deflated dollars. If
Right.
they were actually to sell, pull that money back, and then maybe wait and buy again when the interest rates come down and the exchange rates recover, which they probably will. I'm not that experienced, but I think that they go up and down just like everything else. But that's something I think we should be talking about. We should be talking about like the pre-probate transfer of wealth, right? So that parents can see
Yep.
their kids enjoy property. We should be, and maybe the way to talk about it is, hey, did you know that you could transfer 38,000? And some people think that if you transfer more than that, you have to pay tax on it. But it appears that any excess only goes towards your lifetime exemption. And if you have a high estate worth more than 15 million, you should be transferring at least $38,000 to each qualified recipient, which I think is, children, grandchildren, maybe great grandchildren, that you're allowed to do that. I'm not an expert on it, but you can look that up quickly. So there's a lot of strategies that we can do to at least open their thinking so that they can go through that process, right?
Absolutely.
I think Canadians, who are feeling the pain of paying their bills in the US with deflated dollars can turn that frown upside down by liquidating their appreciated asset and then having a bonus when they convert it to Canadian dollars. And then if, historical trends, here is what I would do. Look, let's see.
Well, as you say that, one of the most important things is the matter of fact, I submitted to speak at in Halifax in October, is for Canadian realtors to have the right referral source when their clients want to sell their home. Because the FERPTA withholding is 15%. And if they don't have a tax identification number when that money is sent to the IRS, it's a very long process to potentially try to get that money back. 15%. And several states also have a tax on top of a withholding tax. So it's critical.
Rob,
Yes.
as for our friends in Florida, they're certainly in the target zone for Canadians in the past, and the ones in Arizona. You have to realize that the RE/MAX agents in Canada are absolutely some of the best agents on our continent, and they are a great referral source. They've always been a great referral source, but we've used them in the past for inbound Canadians. I think that we should reach out and touch our group of past relationships and remind them that we're also a great source for the outbound Canadians, because when they repatriate their wealth in Canada, that agent, having helped them find a good agent in the US, is going to have a pot full of money for them to reinvest in real estate under the guidelines of that Canadian agent. So they get paid two ways. We've enjoyed them sending us business. Now we'd like to send business up to them if they will give us their referrals.
Thinking outside the box as always. But I mean, these are in two of our markets in Arizona and Florida. These are big opportunities on the macroeconomic level. There are also some, nationalities or foreign nationals that, are not wanted in certain states, and I'm not sure what all those laws are. I know in Florida, if you're from, I don't know, 7, 9, or 11 countries, you're basically not allowed to purchase real estate in Florida. So some of those people feel like they don't want to be there if, they're not allowed to buy anything else. That might be an opportunity to get some listings. And I don't know if our team in Arizona has any foreign investors outside of Canada that are of any significance that maybe are shunned politically from buying or prohibited.
We have a pretty good selection of foreign nationals in the state. It's not as strong as the West Coast, including Vancouver, but it's because of pricing and stability weather-wise, it's attractive to them. I just don't know if they're being driven out in the same quantity that the Canadians are. They're pretty upset right now. Their money isn't worth crap. It's going to be expensive for them to come to see us this next winter. I think our Canadian visitors are going to be off 20–30% at least, if not more. And the cost of supporting their home down here is exponentially greater in real money. They're having to use discounted dollars. So it's an opportunity and well worth conversation through our mastermind on how to go after it.
Now there's no south of the border buying in Arizona. There's no probably limited ability to do that, correct? Like people from Mexico or South America?
I don't know. Tricia, do you see a huge influx of Hispanics coming into the buying market? It's probably going on in areas outside of Scottsdale. I've got to be careful what I say.
Not to the level. I mean, mainly Texas and California is more Mexican buyers are in those states. The matter of fact, NAR just released the international transactions for 2025, and I'm on a Facebook group and would love to invite anybody. Maybe I can send it to the offices and they send it out. But Alex Escudero, he is the NAR Global Strategy. He's going to be presenting that a week Monday, August the 4th at 10 a.m. Pacific time. A great resource if you work with any foreign buyers or sellers.
So Tricia, have you worked with multi-generations where the parents and then the kids have bought through you?
From Canada?
No, for anywhere, right?
Oh, absolutely. Yes.
Now think about this. So we've worked with the parents, right? If we can somehow through, I think, video, educate them on the fact that, hey, just wanted to make you aware that you can increase your estate. You can eliminate estate taxes by transferring, 38,000. And by the way, did you know that, blah, blah, blah. And at the end of each one of these say, confirm with your accountant is not, professional advice, but based on our research, right? And then there are going to be some people in all of our databases that are, no, no or high equity or no mortgage, um, aging, and probably would be like, that would be a great idea, but I just haven't thought of it, right? If there's 100 people, you know, it's got to be 5, maybe 30 that are gonna be like, wow, I really didn't even think about that. Like, I'm living a lot longer than I thought. My kids are living in a 2-bedroom townhouse, and I can give them the opportunity to enjoy some of my wealth, before I pass on, right? And I can see them enjoy it, right? And you can put that out there, and it will resonate, not offend people if it's like maybe a very, very well done social media post or a strategic, email video to educate people, right? But I do think that there are a lot of people that it's just not top of mind. They haven't even thought about it, right? Who thinks about that? Maybe you think about it when you do your will. You did it 30 years ago and you haven't looked at it since.
I think if you personalize it and really bring it down to the heart level and say, those kids of yours, your grandkids, you'll never see the joy on their face for any part of what they're going to inherit from you. You'll never see what your money that you've worked so hard to save and ultimately distribute. You'll never see what it actually does for you. By entertaining the opportunity to do generational wealth, you can actually help them enjoy side by side with them as they're making an important step in life. And we will help you guide there.
Yep. So I think, again, knowledge is power, and, we do more than just open doors and sell houses, right? I think if we really care about the clients, we have a duty to let them know, and it's not groveling because we want to make a sale. It's like helping people make the right choice for them and their family. And I think, most parents would probably rather see their kids enjoy it before they pass on. Especially as they live into 80s or 90s or longer, as that's increasingly happening, right? And who knows, they might even be, living with their children because they're not able to be on their own, right? So it's just like this full circle that it goes in.
They'll be nicer to you when you need them to help you later on.
Exactly. Well, we're going to hope that. Yep. So, let me just see. I had one other thing on my chart here. I want to just go through with everybody here, and then I'll open it up to ideas and conversations. Oh, here's the forecast. This is why real estate is incredibly local. So I did like the Northeast and I did the South. And 2024, the Northeast was up 5%, 5.43% in 2024, and 0.5% in 2 years. And Arizona, Florida, and Texas were down 6.6, 4.4 for a combined 11.3 in those same 2 years. Pretty stark difference. 2025 forecast for the entire year is a lot rosier than I thought. It's 8.6% for, and I'm sorry, and this is in units, not in prices. It's 8.6% in the South states and 5.6 in New Jersey. And I think units, volume of transactions is more relevant to us because that's how we make our money. And that's really what our total available market is. You know, if the price goes up 10%, yes, we can earn more on that. But if the units go down 20%, the price goes up 10, the available pool of revenue or income is diminished. So I just want to put that out there and look at what the available marketplace is. Look at, where you want your share to be and there what's your, market share in that available market that you define. Okay? These are all things that I think agents, they just magically come up with a forecast and a budget, and they're not very specific on the market or how the market's going to impact what they're doing.
Rob, can we get
So,
access to your Excel
yes,
sheets? Thank you.
yes. I will put it in the hub, and I'll also put it in this the chat here. So
Is the last chart NAR numbers, Rob?
a lot of the data, so truth be told, this looks like hours and hours of research, but thanks to artificial intelligence, it made my life very easy. So a lot of this stuff is footnoted from NAR, but there's some of the data is from NAR and other combined sources, but most of the footnoting was NAR.
Thanks.
So I'm going to put this in the chat here. So anybody have any other ideas on how this can change what we're doing? More than just amusement for numbers? Anybody?
Well, I
I'm trying to
think
think about how we can increase the opportunity for this to go out
Mr.
more
Conover.
on a national level, to people
sir,
so
good,
that
good.
they can see this, they're not seeing it. Certainly NAR does have consumer, information, and I will send a message to the Consumer Advocacy Committee to try and maybe put something together. I mean, we need to start broadcasting some good news or some ideas and make some changes.
I went to see it. I took a couple pictures. The house looks really nice.
Hang on.
It's a nice neighborhood. It's more of a retirement home.
There we go. Somebody's actively selling here. So Fran, how about like even like NAR, trying to educate agents to educate their clients about things like this?
Yeah, that's something that along those lines, educating the agents, educating the consumer also. Their consumer advertising campaign this year doesn't focus on anything about that. But I could certainly bring it forward. I sit on that committee, but it takes a year. It doesn't it doesn't happen easily. And even the locals, they could really do something to bring this to the forefront for people to start using.
Yep.
Like I'm doing an ad myself, and I'm thinking maybe I should, put an ad out there. I put an ad in for 13 weeks, and maybe I should put it out there. Have you thought about your wealth and, generational wealth, and certainly sharing that now? I mean, it's a good idea. I mean, people hold on to it, forever, and then, they don't get to see their families or children enjoy it.
Rob, there's also a trend, I don't know if it's common in the other states in South Florida, specifically like Broward, about this builders building multi-generational homes where the families obviously get combined, where there's almost like a casita towards the front of the property with its own entrance and things like that. So I think there's also, with all new construction growing in Florida, it's a great way to get some folks that have a lot of equity in their homes. And maybe, I mean, it's not for every family, not every family wants to be combined, but really do some research on the builders that are taking a different look at multi-generational living, and promote
So-
that as well.
Are we seeing that in Arizona much? There is still construction in Arizona, and then I'll go to Pennsylvania.
Yes, they actually have several builders that build multi-generation homes. And the matter of fact, Shea Homes here had a home right in the IKEA parking lot probably 10 years ago, and they furnished it all with IKEA furnishings. So, but that's gone, but multi-generation. But I think other cultures live together more than North American people.
Yep.
Gotcha.
Mhm.
And Tom, Roman, anybody from our Pennsylvania market, Vandella?
So I think it's cultural, is what we see here. I'm not seeing a lot of builders building it, but we are seeing a lot of, maybe boomers adding onto their properties for their children. It's not very prevalent, but you do see it a little bit where they're trying to, I don't want to say build compounds, but, add additional couple thousand square feet to house, growing families.
Lennar is actually doing that here. Lennar Builders.
It was Lennar that had the home in the IKEA parking lot quite a few years
Same here.
ago.
It's Lennar and a Homestead. There's also other builders that are adding second-story homes to what typically would be a 55-plus single family, with the expectation that they would live on the first floor and then the kids would go on the second floor. So very unusual for 55-plus out here to have second-story homes, and GL Homes is starting to do that.
So I heard
Rob,
the other day a very interesting way of accomplishing this. I have a nephew who lives outside of Denver, and his sister lives in Houston, and they've decided that she is going to put up a tiny house in his backyard. And because they're very close, and
now they blow away. Well,
Hold on,
Rob,
I'm
I have a
gonna-
question on your previous spreadsheet.
Yeah, I'm gonna mute everybody. Just unmute yourself.
Okay.
Okay, you gotta unmute yourself.
My question is, what parameters did NAR use, for example, for Texas and Florida to see those increase in units for the next year and a half or so?
You mean for the forecast?
Yeah.
I don't know how the economist does that.
Those are things that we should be promoting on social media,
I mean, you
access to that.
and start to play around with ChatGPT or whatever your AI of choice is, because I think it gives you a lot of information. Now, does anybody work with an Indian? Let's see. Anybody know what Susu is? SOU.
I'm familiar with it.
Who is?
Mandela.
Okay, Vandell. Can you tell the group what that is?
Call it Susu. It's called Partner. And I was a banker in Jamaica, and I usually my first property actually that I built in Jamaica was built from this partner money. Africans call it Susu, Haitians call it Susu, same thing. So the idea is you pool your money with your friends and family, and it could be weekly, bi-weekly. Each person gets that pool of money, and you contribute until, it could be a year or whatever that is, that everyone gets their money out of it. The banker holds a little bit of it, as a gift to facilitate the transactions every week or bi-weekly. I've actually had clients who's used that money, converted that to purchase in their home. And here, and the lender considers that a family and friends sharing club, and it was approved. So I do work with a few people that uses that money to purchase homes here.
And Vandella, I remember when I started out as a lender in the Mercer County Princeton, Plainsboro market. It was primarily the Indian culture would come over, and there would be like 3 families, and I would strategically say, all right, you know, you and you will be on the first one, right? And then on the second property will be spouse 2 and cousin 1 will be on that one, right? And we planned out how we were going to purchase 3 houses for 3 families by pooling the funds together and not putting everybody on the mortgage so that it would be, challenging. And if we did put them on the mortgage, we had structures for how it wouldn't count. And I don't know if anybody's in lending still, but like if you do the pooled buying, right? And this is really important for everybody because you might be able to add some value to your clients. If you do pooled buying, right? 3 families, maybe it's, the 2 breadwinners need to be on the mortgage first. And it's, it takes them another 18 months to save up enough money for house 2, right? If the primary owner of that house is paying it from an account that only has their name on it, and they can show that to the bank, perhaps the secondary cosigner won't have that counted against them, even if it's on their credit report. Is that still valid, any lenders?
I've not seen that. I'm
So,
not.
or do we lose all the lenders? Frank, you're gone? Okay, so I'm gonna say that this is a real possibility, and a lot of lenders probably will do that. And the key to that is not to have a joint account. Okay, because I know, like, if a parent signs for a child's car and they pay it out of a joint account, even if the child puts all the money into it, the parent still has that as a liability against them when they go to borrow extra money. But if the child can prove that they paid it timely without the mother or the co-signer's um, uh, contribution, that's probably still going to be able to be excluded. These are some really good tips to help you structure, multiple transactions to help people get what they want. Because the fact that the age is so much higher is probably a lot due to the inability to come up with significant down payments and to qualify.
Right.
And if you do it that way, hey, I scratch your back, you scratch my back, we're family. You buy the first one, I buy the second one. Maybe you even say, look, if there's appreciation there, you give me, half of the appreciation since I gave you half the down payment. Maybe you do a home equity loan to give me that money back.
Right.
So look, I'm shooting out ideas like a fire hose, right? It's hard to drink from it, but there's a lot of great things that we can do to help our clients, right? Just by educating them. And please, if you talk to somebody and say it didn't work, or my client doesn't want to give money to their kid, like it's not going to work all the time, and it's not even about getting it to work for us. It's about giving our clients the options, right? And if we help our clients, trust me, we'll have so much business and wealth that we won't have to worry about anything. But if we're trying to promote it, like if I'm trying to convince you, Vandella, to give money to your kids, and you feel like I have a motive, you're gonna sense that, and you're probably gonna push back, right? You're like, that guy,
Sure.
Rob, he just wants to make another sale. But if I'm just speaking and saying, hey, I just want to make sure you are aware of this,
Right.
it doesn't make any difference to me, but I just don't want you ever to come to me, Vandella, and say, I wish as my real estate professional, you would have educated me on that.
For sure. And that's
It's,
why
it's
in the consultations, you want to know all the different options to get the money, because a lot of time they think they're not able to do it. This lady thought she wouldn't be able to do that because they didn't have the money. But then I was like, aren't you doing the partner thing that we normally do in our culture? And she goes, yeah. And I'm like, well, you can use that money. We'll just have to document it, and we've done it. I've closed people deal many times with that type of money. It's just having the information, knowing how to structure it, and you should be fine.
Has anyone done a Susu purchase in the past in 2025? And the reason I'm asking this is because we can borrow that and do it as a story. Say, hey, our company, we had somebody just buy their first home because they pulled together, and in September of next year, the second family is going to buy their own, and the mission will be complete, right? Two people who couldn't afford to buy are now homeowners. So if anybody's done that, we ought to, without disclosing particular names, I don't want to manufacture information, but hey, the Remax Select Group had a family that could neither one could afford. They pulled their money. They bought a house in February of 25, and now September of 26, we're scheduled to buy house number 2.
So
And
Rob, I don't have a Susu transaction coming up, but I do have a father gifting his daughter money for the down payment. I need to find out if he even knows about the $19,000 gift allowance. So if it is, I'll let you know, and then we'll create a post on it.
right.
I've got something to add to the cash to close. Howard earlier talked about a gift, and we are obviously talking a lot about a gift from mom and dad. And with an FHA loan, that's great. You can do 100% gift. With a conventional loan, they can do 100% gift, but it has to be 20%, or the buyer has to have 5% of their own funds. I ended up on a transaction in the past where buyer did not have 5% of his own funds and couldn't put 20% down. However, I did ask him about, well, do you have a joint account with parents? And he was on a joint account with his parents, and therefore it was his own money, even though he didn't physically put that money in the account. So in some states, you have to get the other person to say, yes, this is a joint account. The other person can withdraw as much as he wants, or, they can just withdraw it. But a joint account's a joint account. I mean, you can take whatever you want out of there. And he ended up having 5% of his own funds, even though he knew technically that was mom and dad's, but he was on the account jointly for quite some time.
So
Worked
Beth, how many years have you been selling real estate?
20.
And we always try to educate buyers or potential buyers to speak to a lender, get everything done ahead of time. But when do they normally put all their finances in order?
Right before they speak to a lender or during it.
Right when they're ready to buy, right?
Right.
So so many of these issues can be eliminated, because if I came to you and said I want to buy in November, right?
Right.
You'd say, I want you to talk to whoever, right? And a lot of times they say, all right, yeah, but I'm going to wait. But if they had that conversation and mom and dad gave them that gift in July, when you get to November, that money will be seasoned in their account. There will be no questions.
That's correct.
Right. Just by talking in advance. And, so many times interest rates even are based upon your credit score, right? And, a lender that's worth their salt will give you advice on how to improve your credit score. And it might just mean, you know what, pay off your credit card the day before the statement, and then you can just start charging it up again, because you don't understand how these report to the credit bureaus, right?
Correct.
And if you have a lower credit score, most lenders have an adverse impact on the rate you get. It's like a small add-on. Like, hey, if you're a 640, you're at 7 1/8. If you're at a 820, you're at 6 3/4.
Right. Right.
Right,
And,
which is a lot.
I have a buyer right now who's interested in buying a fairly unique piece of property. And so I've suggested it's going to be a few months before he closes. So I suggested go to a lender, say, this is what my plan is. This is what I want to do. What's it going to take for me to get there by, January? And I said, you get that done up front, and then in January, you're going to be ready to move forward instead of scrambling and getting a no. So when you talk to people, just, if it's a little bit unique, you've got to go to a lender, ask them, what's it going to take to get to the goal so I can buy something? It's not rocket science, really. It's just making sure you prep your clients.
Yep. So any last questions?
So, Vendel, I have something to say to Audrey Porter. She sent a message there regarding using the Susu dollars and the fact that some banks wanted to know where the money is from. So in the scenario I mentioned that we've done a couple of times was a mortgage broker. This was not a traditional bank that we went through. And the lender documented it how he wanted it. So maybe the traditional banks will make it a little bit more difficult if you use the social money, because obviously they want to know where it's from. But this was a broker that we use a few times to do that. I'm actually working on another one. So, and it's not a traditional bank. It's just a broker, mortgage broker.
All right. And anybody have, I want 3 people to give me takeaways that you're going to do something with before we wrap up. What's a takeaway that you're going to take from what we talked about today and put into action in the next 7 days?
I'm going to review the stat that you sent so that I know the numbers a little better so that I can skew my conversations surrounding the ups and downs of the market and where we're at right now. It looks like we're heading in a good direction. So I'm going to review that so that I can know the numbers when I'm speaking from here out.
And here's something that else that's really interesting, Vandella. Like over time, it's pretty safe to say that the stock market, if you put in index funds over a period of time, will be 10%. It might be 8, might be 11, but it's pretty safe. It's pretty safe to say real estate over time is going to appreciate at 5.5%. Okay. And I think if you have all of these stats top of mind, it's everybody should know that homeowners are worth 40 times more than renters, right? And you don't need to be throwing that around like a jerk, but you need to be able to say, hey, did you happen to know, right? And the reason that is because of all the things like you get appreciation on, all the home, not just the down payment. You get all these tax benefits. The tax benefits may be getting even richer with bigger exemptions, right? There's just so much stuff going for you if you're a homeowner, and you might even ask, if you owned your first home for 7 years and increased at 5.5%, run those numbers out, right? And say, hey, you would have about $170,000 worth of appreciation, and that would be tax-free cash. Do you know how much you'd have to earn on a W-2 to
Right?
have 170,000, right?
So, yep.
And you don't tell them. You say, Vandella, open up your pay stub. What's your net to gross? Oh, it's 68%. So let's take that 170,000 on your. Do this for me, Vandella. 170,000 on your phone. 170,000 divided by 0.68.
170,000
divided by 0.68.
0.68. 250,000.
So 250,000. So you'd have to make 250,000 on a W-2. What's your hourly rate?
Mine's is $250,
Well,
but
well, well,
for
well,
them, yes.
let's
What's
say
your
somebody
hourly
doing.
rate?
Let's
How
say
long does it take to make?
let's say somebody has an hourly rate of $58.
So you
So you
divide
take
that by
$58. 250,000 divided by
Yeah.
$58. How many hours is that?
4,310 hours you got to work to make that.
So that means that you, and then let's just say that you worked an extra 10 hours a week. So that's 520 hours a year. So divide that by 520.
Divide by 520.
I'm sorry, divide that. So let me just think. So you would
4,310 was the number.
So
You should be divided by 12,
no.
right?
No. So 500 and
20.
520 hours times 52 times $50 an hour is what? It's a 520. So it's
Times 52.
Was it 25,000? 25,000?
It's a bigger number, but when you multiply it, it's 1.352. But I think you want to divide it.
No, 52. So if you work 10 hours extra a week, you'd be making $2,600. So it would take you 10 years to get you'd make 26,000. It would take you 10 years of working an extra 10 hours a week to make that 250,000.
Yeah.
So you would have to work a 10-hour Saturday for the next 10 years to
10
get the
years, yeah.
benefit of just the appreciation of home ownership.
Right.
Like those are conversations I think we just need to have with our clients so that they can understand it and it can be relatable. So Vandella, thanks for being a contributor here today, and everybody have a wonderful weekend. All right. Arizona, it was a great time there. Look forward to seeing Florida next week. Bye, everybody.
Have a great weekend. Thank you.
Bye-bye.